John Higgins, Mortgage One. Happy Monday. So, real quick recap on kind of what we saw last week with regard to interest rates. So since the end of last year, we've seen a little bit of a moderation in rates. The inflation numbers were looking a lot better, and in the month of February, there's been a little bit of a reversal there. So we had seen the CPI and the PPI numbers, so those are the consumer and producer price index numbers, show a little bit less of a roll down. They're stubborn, I guess is the best way to put it. And the Fed last week came out with their Fed minutes from their previous meeting where they raised 25 basis points. And at the same time, they released the PCE number, which is their personal consumption expenditure. So we got that last week as well. And again, showing that inflation is a little more stubborn than the market may have been looking for. So we started to see our interest rates pick back up a bit. We saw interest rates coming out of 2022 starting to roll down a bit. We had peaked out at around 7.5%. We're now at levels that we saw more towards the beginning of the year, so kind of the highest levels as we start to work our way back up towards 7% again, or maybe just actually peaking above that. We are at some technical levels right now, so we're hoping that there'll be some buying in the bond market come in and bring these rates down a bit. But as we look at inflation around the globe, and that it's been a little more stubborn than maybe the Fed was expecting, and certainly more so than the market is expecting. If you look at what Fed Chairman Powell had to say in his last minutes, they are starting to talk about deflation, so to speak, or at least a rollback of inflation, and that's not showing up in the numbers yet. And as we head into the spring selling season, we don't have much inventory out there, and lower rates would go a long way towards helping a few sellers maybe come to market. But, all in all, again, we don't think rates are going to break above what we saw last year. But, the rollback that we'd been kind of hoping, or the trend continuing, has been a little bit disrupted with the numbers that we've seen throughout the month of February. So we've got jobs numbers coming up later this week. That'll be another test for the market to see. The job market continues to be strong, and as we know, it's important that people have jobs to buy homes. So that's good. The recession that they've been talking about coming maybe latter part of this year, with the economy still growing and jobs still looking good, maybe we do get that soft landing that they're talking about, and we avoid anything that's a true recession or anything that's steep as far as that goes. So have a great week. We'll give you an update next week after the jobs number comes out.